We're constantly told that what moves financial markets are the daily headlines, the earnings reports, the latest inflation data, some political drama. But what if that's not the whole story? What if the most powerful forces changing the value of your money are the ones we never really see? What if the real stories are hidden in plain sight?
So let me ask this. Are the biggest stories in finance a lie? Now, that sounds dramatic, I know. But so many of the popular narratives we hear are just that. They're simple stories. They're easy to digest, but they often cover up a much more complex and honestly a way more interesting reality. And today, that's exactly what we're going to dig into.
It really boils down to this. On one side, you have the headlines, all that surface-level noise we get hit with every single day. But underneath all of that are the hidden forces, these deep, structural mechanics that are actually running the show. And we're going to uncover them, starting with maybe the biggest story in crypto.
Right. First up, Bitcoin. We've all heard the stories, right? It's digital gold, it's the future of money, it's a hedge against inflation. But here's the thing. When you stop listening to the stories and you just look at the hard data, a very, very different picture starts to emerge.
So, to really put Bitcoin's claims to the test, we have to go back to basics. What is money anyway? Well, economists will tell you it has to do three key things really well. It has to be a medium of exchange, a store of value, and a unit of account. So let's see how Bitcoin stacks up, shall we?
All right, first test. Can you actually buy stuff with it? Your coffee, your groceries. That's its job as a medium of exchange. And on this one, well, Bitcoin doesn't just fall short. It fails spectacularly. It's slow, it's expensive to use, and it's just unbelievably inefficient.
In this chart just lays it all out. The entire Bitcoin network can process about 500,000 transactions in a full day. Now that might sound like a lot, until you realize the Visa network handles that same amount in less than 8 seconds. They're not even playing the same sport.
Okay, so fail number one. What about the whole digital gold argument? The idea that it's a safe place to park your money, a reliable store of value? Well, once again, you check the data, and that story just completely falls apart.
And here are the two big reasons why. First, a store of value needs to be, stable. An asset that can jump off or crash down 20% in a single month isn't stable. It's pure speculation. And second, look at the ownership. It's so concentrated, with just 2% of accounts controlling 95% of all Bitcoin. That makes it incredibly easy for a few big players to move the price around.
And that brings us to the final test. Is it a unit of account? All that means is, are things actually priced in Bitcoin? And the answer is a hard no. Even the few places that say they accept Bitcoin are really just pricing everything in dollars and doing a quick conversion for you at the checkout. It's not a real yardstick for value.
So if it fails all three basic tests of what money is, where does the price come from? Well, it likely comes from a really old idea in finance called the greater fool theory. The value isn't based on what it can do. It's based entirely on the belief that you can sell it to someone else, a greater fool, for a higher price down the road.
Okay, let's zoom out. We're going from a single asset to a massive, hidden force that shaped the entire global economy. For the last 30 years, the country we know for its amazing food and culture has also been like the financial duct tape holding the world together. I'm talking about Japan, the world's hidden ATM.
And here's how it worked. It was actually pretty simple. For decades, Japan's interest rates were basically zero. So big investors could do step 1, borrow Japanese yen for free. Step 2, they'd immediately swap those yen for US dollars. Then, for step 3, they'd buy something safe like a US government bond that paid, say, 4% interest. And finally, step 4, they just pocket the difference. This one simple trade, called the yen carry trade, pumped trillions of dollars of cheap money into markets all over the world.
Now, why does this matter so much? Well, as the legendary investor Ray Dalio says here, the bond market is the backbone of everything. The interest rate on those bonds basically sets the price of money for the whole planet. And for 3 decades, this carry trade created a giant, constant buyer for those bonds, which helped keep borrowing costs low for everyone, everywhere.
But here's the punchline. This is all changing. The Bank of Japan is finally starting to raise interest rates. That free money isn't free anymore. That whole trade is unwinding, and that 30-year-long river of capital is starting to flow backwards, pulling cash out of the system. Now that is a hidden force you're not going to see on the nightly news. All right, next up, geopolitics. Whenever we hear about an oil crisis, we just assume it's bad news for everybody, right? Higher prices at the pump, economic slowdown. But what if it's not?
what if an energy shock hits different parts of the world in completely different ways? And what if that difference can be used as a weapon?
So get this. About a fifth of the entire world's oil supply has to pass through this tiny little choke point in the Middle East called the Strait of Hormuz. If that gets shut down, it's a huge global problem. But look who actually depends on that oil. A staggering 75% of it is going to Asia, to places like China, India, and Japan. The United States? We get a tiny 2.5% from there.
This creates what experts call an asymmetric shock. For Asia, a disruption there is a potential catastrophe. It's not just a price problem, it's a supply problem. Their factories could literally grind to a halt. But for the US, which is now the world's biggest oil producer, it's a totally different story. Sure, prices go up, but it's also a massive revenue opportunity for American energy companies.
And that is the hidden story. When one major country can easily handle a crisis while its main economic rival feels enormous pain from it, that crisis stops being just a random event. It becomes a tool. It becomes a source of geopolitical leverage you can use in high-stakes negotiations.
For our final hidden force, we're going to look at technology. But I'm not talking about all the flashy AI hype that you're seeing everywhere. I'm talking about a much quieter revolution that's completely changing how money is managed. You know, for decades, investing was run by people with gut feelings and stories. Then, back in the 90s, the mathematicians showed up with their quantitative funds, using complex algorithms instead of intuition. And now, we're in the next phase, the rise of robo-advisors, which bring that same automated, math-based approach to everybody.
And let me tell you, that shift from stories to math, it worked obscenely well. The famous Medallion Fund, run by pure algorithms, produced average annual returns of over 60% for decades. This wasn't just a small improvement, it was a total demolition of the old way of doing things.
And now that same algorithmic power is available to everyone. The amount of money managed by these automated robo-advisors has absolutely exploded, going from less than $200 billion in 2017 to almost $3 trillion today. That's not a trend, that's a fundamental restructuring of an entire industry.
It all comes down to a really simple universal rule. People used to pay financial advisors for access to the markets, to information. But the internet made access practically free. And whenever access becomes free, technology steps in and replaces the middleman. We saw it with travel agents, we saw it with stockbrokers, and now it's happening to investment managers.
So, from the stories behind Bitcoin to the silent reversal of a 30-year-old trade, it turns out the biggest forces shaping our world are rarely the loudest ones. The real risk and the real opportunity isn't in the daily headlines. It's in the deep, powerful systems hiding just behind them. So the real question you should be asking yourself is, what hidden force will be next?